We all know partnership to be an agreement between 2 to 20 people who join their resources or their capital together in order for them to establish a business with the main aim of maximizing profit. We have this in our previous videos, we have discussed the meaning of partnership, type of partnership, mostly all the theoretical aspect of partnership accounts. So today we're going to be solving an illustration on partnership account. And the question here says we are required to prepare the appropriation account and the current account. So in our question, we have two partners who are Aino and Ujo. So in a partnership as a furniture manufacturer. Now the profit sharing ratio was 3:1. These were their current assets, current account, their capital account, and these were the agreements that was agreed by the two partners. So I advise you to pause the video and write the question down in order for you to be following up with the calculation we are about to do. Now, so the first account to prepare is our appropriation account. In preparing the appropriation account, there are two things involved. First is the money that is going to the business. It will be on the credit side, while money that is going to the partners will be on the debit side. What I meant is, at the end of the year, if a business makes a net profit, it's going to be at the credit side of the appropriation account. Then during the period, if any of the partners is receiving salary, which means one of the partners is receiving salary or both of the partners is receiving salary. So any income that is going to the pockets of the partners is going to be recorded in the debit side of the appropriation account. So the first thing is to input our net profit. Now, net profit is an income that is going to the business, so it's going to be on the credit side of the appropriation account. So we have a net profit. The question, the net profit is 18,500. And in the credit side, if you read through your question and you're able to identify the money that is going to the business, that the business is saying as an income. And if you go through the question, you see there's a 10% interest on drawings. Now, what is drawings? Drawings is an amount of money that a owner or a partner takes from the business for his or her personal use. So interest on drawings is the interest that is being charged whenever a partner takes money from the business. So that interest is going to the business. The business is seeing it as an income. So you say interest on drawings. Now the interest on drawings was for both partners. In our question, which the account shows that each partner made drawings of 1,500, while the interest on drawings was 10%. So you are going to take 10% of 1,500. So when you take 10% of 1,500 for both partners, since each of the partners took 1,500. So the first partner, who is Aino, so since each partner took 1,500, the interest that the both of them is going to pay is 1,150 each. So when you sum up 150 plus 150, you are going to have a result of 300. The 300, you add it up to the net profit. So when you add it to the net profit, which is 18,500, in addition to 300 naira to give you 18,800. Now let's move on to the debit side. The debit side of our account, this refers to money that the partners receive. Now if you look at the agreement, they said Aino is to be credited with a salary of 5,000 naira per annum. Aino is a partner, he is going to receive a sum of 5,000 naira, which means he's receiving, so it's going to be on the debit side in the appropriation account. Just have it in mind that money that is going to the business in the appropriation account will be on the credit side, while money going to the partners will be on the debit side. Salary of 5,000 naira. Is there any other money going to the partners? Yes, which is interest on capital. Interest on capital is a portion or a percentage that is being allowed for the partners to take a certain sum from the money or resources that they put into the business. So which means if you take the interest of their capital, which is any percentage being given as per the agreements that they both, as per the agreement, they are going to be receiving that percentage, not the full capital, just the percentage of the capital. So which means the partners is receiving money. That's the reason why interest on capital is on the debit side. And in our question, interest on capital, they said it should be charged to 5% per annum. So which means the capital of both partners, which is under the capital account, you should charge 5%. So which means out of this capital that each of the partners imputed into the business, they are to be receiving 5% of their capital that was inputted into the business. So when you take 5%, so the first partner, which is Mr. Aino, you take 5%. So when you take the 5% of Mr. Aino's capital, so which is 5% of 18,000, which will give you 5% of 18,000. When you punch your calculator, you're going to have a result of 900. The next thing to do now is to also take the 5% of Mr. Ojo's capital. So Mr. Ojo's capital is 20,000. So when you take the 5% of Mr. Ojo's capital, you're going to have a result of 1,000 now. So what you're going to do now is you add up these two capitals together to get the total interest on capital. So when you add it up, which is 900 plus 1,000, you're going to have a result of 1,900. So the moment you sum the salary and the interest on capital, you're going to have a total of 6,900. So the next thing to do now is you want to know how much profit did the two partners took have at the end of the trading period or at the end of any accounting period. Now, this appropriation account now is to help us to know how these two partners were able to share their profits. That's the main reason we are creating appropriation accounts. So appropriation accounts provides us with details of transactions that occurred while the two partners were in partnership, and at the end of the year or at the end of the trading period, how much did each of the partner took as profits. Now you know that each partner will have a profit sharing ratio. Now this profit sharing ratio can be equal, then it cannot be equal depending on the agreement of both partners. So if any of these partners make a profit, they are going to share it according to that profit, according to the ratio. And if they make any loss, they are still going to share it according to the ratio that they agreed upon. So how you get your share of profit? To get your share of profits, you have to less the total credit side, which is 18,800. You less it from the debit side, the total debit side, which is 6,900. So we went to less 6,900 from 18,800. We went to less it, you are going to have a balance of 11,900. So now this 11,900, that's what you are going to use to share that. You are going to use that balance to share it according to the profit ratio or loss ratio of both partners. Now in our question, they said both partners are to share profit and loss in the ratio of 3:1. So which means Aino is getting 3 while Ojo is getting 1. So how do you get your ratio? You add up the two ratio, which is 3 plus 1. Once you add it up, you have 4. Then you use the ratio of a partner, divide it by the total ratio, then multiply it by the balance, which is 11,900. So let me compute it now. So the moment we shared it, which is 3 divided by 4 times 11,900, when you punch your calculator, you're going to have a result of 8,925 naira. Then you also solve for Ojo. How much profit did Ojo took, which is 1/4 multiplied by 11,900. And it will give you a result of 2,975 naira. So you have to sum up the share of profit of both partners, which is the profit of Aino and the profit of Ojo. When you sum it up, you're going to have a total of 11,900. So when you add up the 6,900 to 11,900, you're now going to have a balancing figure with the credit side of the appropriation account, which will give you 18,800. Now, once you have a balancing figure in the appropriation account, it means that you are done with the appropriation account. So the next account to prepare is your current account. So now, how do you prepare your current account? When you prepare your current account, there are two things involved. The first is that you have to take all the items on the debit side to the credit side, then all the items on the credit side, excluding the net profit, you take it to the debit side. That's what current account is all about. Then in that, all the items in the credit side, which is the interest on loan, if you are taking it to the debit side, you are also, if there is a drawings, you add up the drawings. So for our current account, both partners' name will be on top. First, we have our particulars, which is the details of what you are doing. Then you have the name of both partners, which is Mr. Aino and Ojo. Then the same thing on the debit side, on the credit side actually. We have Miss Aino and you have Ojo. So what we're going to do now is, I said all the items on the credit side will be on the debit side, while all the items on the credit side, excluding net profit, will be on the debit side. Now, before you jump into it, now if you look at our question, they say something like current account. Now, this current account is just like a balance brought forward. That's what this current account is. Like the question is something like current account. Then they now give you both partners and give you the amount, and beside it you see something like credit and debit. And the credit and debit is trying to show you where you are going to place the amount, that you are going to record the balance brought forward of each partners. That is what the credit and debit beside the amounts of those partners will be. That's what it's trying to tell us actually. So in doing this current accounts, Mr. Aino, they said credit side, the balance brought forward for Mr. Aino was on the credit side, while for Mr. Ojo it was on the debit side. So Mr. Aino, balance brought forward. So Mr. Aino was on the credit side of 1,008. So you record Mr. Aino 1,800. Then the next thing for Mr. Ojo, they say debit side of 3,000. So balance brought forward of 3,000. Next thing to do now is to take all the items on the credit side to the debit side. So the first item on the debit side was salary. Now this salary now, they gave it to somebody. They gave it to one of the partners. They said Mr. Aino is to be credited with a salary of 5,000. So which means the amount is going to be under Mr. Aino for 5,000 naira. Then the next thing there was interest on capital. So now for both partners, the interest on capital for Mr. Aino was 900, while for Mr. Ojo was 1,000 naira. Then move ahead, share of profits. Now the share of profits for Mr. Aino was 8,925, while for Mr. Ojo was 2,975. So we are done with all the items in the appropriation account that was on the debit side. We have transferred it to the credit side in our current account. Now let's focus on our debit side now. Now our debit side, before we take any items on the credit side to the debit side in our current account, what you're going to do now is you have to check if any of these partners paid a drawings. Like, did they have any drawings? Did they took any money from the business? And my question says the account shows that each partner made drawings of 1,500. So which means you have to record the drawings before you record any items that you are transferring from the credit side of the appropriation account to the debit side of the current account. So you write your drawings. Now, let's say both partner made the drawings of 1,005. Then move ahead. What was the item on the credit side in our appropriation account? It was interest on drawings. So you record your interest on drawings. Interest on drawings for Mr. Aino was 150. While for Mr. Ojo was also 150. Now the next thing to do now is to balance your debits and your credit side. So what you're going to do now is you add up all the items on the debit side, then add up all the items on the credit side. Try to measure it. Which one is greater and which one is not greater. That which one is less and which one is high. So what you're going to do now is the one that is less, you have to subtract it from the higher one. The balance that is there, you have to add it up to that one that is less in order for the debit and the credit side to be equal. So after adding up, I found out that for Mr. Aino, the debit side was less. So you have a balance carried down. Now this balance carried down explains to us that this is the amount that should be added to the lesser figure, the lesser item, or the lesser account in order for it to balance up with the credit side. So for Mr. Aino, they had a less figure of 14. They had a difference, that is the balance was 14,750 for Mr. Aino. While for Mr. Ojo, we have a balance carried down of 675 naira. So when you add all the money together, so what you're going to know now is you see that these two balance is now equal due to we're able to add up the remaining balance of the lesser due to we're able to add up the balance that we got while subtracting the greater amounts from the lesser amounts, and we added it up to the lesser amount, and now for it to balance up with the greater amounts. That was what we did, and that's all for appropriation and current account. So in next video, we'll have a computation or an illustration on the final account of a partnership the final account of partnership. Now this will carry the trading accounts, the profit and loss accounts, and we trying to know the profit that was made by each partners, and also trying to get the balancing figure of both partners, which is the current account, the appropriation account, and everything. Thank you. And please don't forget to subscribe, like, comment if you have any question, and also don't forget to share this video to other people that, or other students or your colleagues that find this hard to understand partnership account. Thank you and God bless you, and I'll see you in our next video.